All right, welcome back for another episode of Carnivore Trades. Today is Monday, March 20th, 2023. If you've not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, let's get into it today. So, big story of the day is obviously FRC. Let's take a look at First Republic Bank of good old San Fran. Down just a cool 48% right now, and this thing has been moving very fast. Look at these ticks here. Each tick is like 10, 20 basis points. This was halted a bunch of times today, and you can see, obviously a mass liquidation here. Now, it does look like there is some stop gapping going on. JP Morgan is in talks with, trying to help kind of recapitalize them, fix their depositors, stuff like that. So, the big banks are starting to kind of step in here and kind of quell some of this. Another thing, if you look at the KRE, you still have higher lows here on the daily. So, and it is green today despite that liquidation. So, this obviously is not over with, but markets right now are green, and we'll respect it for the time being here. So, that's just the way it is. Right now, the Fed is doing, they're doing a dollar. They opened a dollar swap line. They opened a Roach Motel over the weekend, or last week as well. I also saw that they did some QE, like actual QE. I know there's been a lot of debate about it. Hold on, let me pull this up for everyone here. And again, there's a lot of talk going on right now about what the Fed's actually doing. It's inflationary, it's not inflationary, this, that. But it looks like they printed $500 billion. At least that's what I'm reading here. Is that short-term liquid? Are they going to pull that back out? I don't know. What are they going to say Wednesday? That's really anybody's guess right now. Goldman is saying that they're going to pause. The Fed funds futures are still pricing in 25 bips. Usually, the Fed's not in the business. The Fed's not in the business of surprising the market. So I'm assuming that's what they're going to go with. However, if we look at the 2-year, they can pause right now. In fact, they could actually cut if they wanted to. I don't think they would do that because they would look like they're panicking. That's why they probably are going to do 25. But, we're back below 4% on the 2-year, and the Fed funds rate's above that, right? So 4.58. I think that's a little dated, but the point is it's higher than the 2-year. So that's really all that matters. My guess is this is just my, I don't know, I'm just kind of thinking out loud here, a scenario that could happen. I think they raised by 25 bips, and then they basically say they're going to pause. And the reason why that is, outside of the obvious reasons, is the 10-year. And I still think yields have bottomed and they're going to go higher. But, this is still just kind of a holding pattern here. And this is an up move. And we have, bigger time frame. We're looking at the monthly. There's just a big bull flag, right? It's really all it is. But you're still kind of extended from that 20 moving average. That 20 moving average catches up. You consolidate for a little bit longer. This will take off. Now, what that means for the equity markets in the near term, we'd probably have a huge pop. I don't know if it would last, but the last couple of times that the equity markets have even sniffed the word pause, they've taken off to the upside, right? So maybe this time that happens and it lasts a couple of weeks. Maybe it lasts for a few hours and the market realizes what that means. Remember, the Fed pause is usually where the biggest leg in the bear market starts, or the Fed pivot. When the Fed starts to reverse, that's usually the where the market starts to has its biggest leg down in the bear market. Now, the reason I'm saying this as well is that the 10-year, again, if they pause, it doesn't mean that they're cutting. So the 10-year could just hold up in this area, in this range, for a while before that 20-month moving average catches up. Again, this is just a scenario here. One thing that would go against that is right now it's counterintuitive for the Fed. The Fed doesn't want to use the word pause because they want the markets lower. They want the reverse wealth effect. That's part of their MO right now. And they know that if they say anything, relating to pausing, the market's going to take off. So they have this kind of box that they're in here. For the upside, though, for the charts, we've got this trend line here. I'm watching that. We're currently below that right now. And then we have this upper trend line as well, which coincides with the 50 moving average and that 400 level. It's almost like it's destined to be tested there again. So, we'll be on watch for that going into the end of the week. One thing that we talked about last week and over the weekend is that the Qs should start to underperform here. And we can see the Qs are just flat today, and they were red for most of the day until recently. And the Russell is up 1.3 with the Dow up 1%, a little over 1% now, and the Spider's up just under 1%. So now the Qs, we talked about this, right? They said the Qs should switch to underperform, and the Russell should switch. The Russell and the Dow should start to catch up a little bit. So right now, I think the risk is more in the NASDAQ as March OPEX is over with. So all those people who were FOMOing into puts at the lows last year, those puts have now rolled over. They're gone. And there's really that lack of invisible bidder and that invisible hand that's holding up the Qs. So again, we'll watch this going into Wednesday. I would think tomorrow's probably going to be a little bit on the quieter side unless we get more bank craziness, just because I think the market at this point is just going to wait for the FOMC. But for right now, the market's holding up. We'll respect it here. And we'll look. We'll just wait to see what Jay Powell says. It's going to be very interesting. And it's very hard to find a consensus, too. There's some people think he's going to completely reverse and cut rates. And there's people who think he's actually going to raise by 50 basis points. I don't know how they came to that conclusion, but that's there. So anyways, let's get over here to sectors. So SMH is holding up decently, up 1.12% on the day. Not a terrible weekly pattern here, but I still don't see a ton of upside in this right now. It's just a big wall of resistance up here, and you have done some flagging, so we'll respect that. It can definitely catch a bid, but there's a lot more resistance here than we have flagging on the weekly. But semi's hanging in there okay. I think they're going to try. At this point, it almost looks like they want it. To me, on Nvidia here, and this basically is the SMH at this point. They might want to pop this one more time. I don't think it gets all the way up to that 75% retrace, which has at about I want to say 285 or 290. Let's take a look at that. Yeah, 286. So I don't think it's going to get that high, but there's a lot of people trying to short it right now, which I totally understand why. And I think those shorts will get paid out here, but I think they're going to try and make it a little bit more frustrating here in the near term. But either way, NVIDIA holding up, semis holding up, cloud software is flat here via the IGV. Again, still kind of struggling with this trend line, but if this consolidates a little bit more, there's nothing to say it can't get a bid, maybe back up to that 295 level. All right, over to the transports. Again, showing weakness. So again, we have this down move here, and now we're just chopping sideways below that 200 moving average. And again, on the weekly, we had a major breakdown. So big bullish inside bar, and that has failed tremendously as of last week. So transport's flashing a warning sign. That is definitely not a positive for the market. Some people are talking about like, oh, the Fed's going to fully switch and do QE. Transports are saying that's probably not going to happen. That could change, but usually the transports lead these types of moves, and right now, this is just not a bullish look here, especially that weekly chart failure there. Anyways, over to interest rates. We already briefly talked about that, but 2-year, pretty good tail candle, and on the 10-year as well. This does have my antenna up. Kind of a, not a really good looking candle there for the 10-year bond. In fact, if we extend this trend line out, you can see that's kind of where we went. Well, let me do that again. There we go. You can see that's been resistance here, and that's a pretty good looking tail. I mean, it's not, this pattern's not broken, but that's there's a lot of supply that came down and pushed that back down. And that's another thing too. I would think that if things were going to get really bullish here, I think the bond market would be sniffing this out a little bit more, and we're not really seeing ZB rally that much. I mean, maybe it's more fear-based that it's holding up. I'm not sure. There's a lot of cross currents going on, so we're really at a nexus right now. Wednesday will tell us a lot more here, but bonds holding up. But that is an interesting little reversal there on an intraday basis. Anyways, over to housing, XHB. Again, nothing's changed here. Down move, still kind of an inside bar bear pattern there. Same thing with the ITB, nice bear base. If this starts to lose this pivot here, this is going down to 62 to 63. VNQ, again, nice bearish inside bar there on the daily after a good weekly breakdown, so that is in rough shape there. Trend is back down on the VNQ. I do not like that chart. We mentioned financials a little bit, but there's the XLF again, trying to find its footing off the lows. It's holding that 31 handle for now. Again, I don't see a ton more downside here in the near term. It does look like they're trying to get out in front of us, and it looks like JPM and the big banks are willing to work with regulators and whatnot. So again, I do think they get a bounce. Now, they ultimately will go lower, but I do think they've kind of put in some local lows here, at least in the near term. Then broker dealers here, down move, another inside bar. So that's a weak chart. But again, if you get positive news, this can rally up, maybe even up to 470. But I would say that's probably your max move there. Ultimately, this probably wants to go back to 400. All right, over to crude. So crude getting a nice bounce here, up 1.25, hitting that 65 handle. And again, we talked about the 200 on the weekly. Again, it should get a bounce there, but this should be minor. I'm not expecting a huge bounce here because we put in a huge base, right? So we had a big base for about 4 months, and that's setting up to move lower. So I think this is in sell the rip mode on crude until you get down to that $50 to $60 level. So crude hanging in there, it's getting a bid, but I'm not expecting a huge move. If this goes sideways, this can be shorted. So just be careful with crude here. If you want to take the short, then go for it. But I might actually do it myself if we get enough of a bounce. So, anyways, over to XLE, up 2% on the day. Again, just trying to hold this trend line. This should get a bounce here. I mean, it's been a good area here. I do think eventually it breaks and we have a steeper correction. But for now, it's holding up. We'll give it the benefit of the doubt here. XOP, same thing. Bouncing off that 115 level. And then OIH there, again, just kind of a choppy bounce there. Maybe this can get back up and retest 280, but I think these do have to go lower. Anyways, over to Natty here. So Natty falling again. I do like this level here, though. And if we take a look on the intraday, let's look at the 4-hour. I like that we're into a 7.5 retrace here. And we're back to full bear, full panic sentiment on Natty. We got from full panic, everybody calling for $1.50 to euphoria in pretty much 8 days. And that generally is going to, make you have to come back in. And now that we're into that 7.5 retrace, we're basically back to, panic mode here. This is also where we broke out from on natural gas a few weeks ago, and cyclically, this is totally normal and right on schedule for a higher low here. So we'll be watching nat gas going into tomorrow. I do think we get a pivot low this week, and then I think we go up and attack that $3 level. I would say probably, by the end of the month or early April. Anyways, dollar index, DXY, so that's holding up for now. I should say it held up on the weekly. We held that green bar low there just by the end of the futures close. It is trading a little bit lower. If this goes down into the Fed meeting, I'd have to favor a reversal. It's just generally the nature of things, but we'll respect the down move for now. We came down here, we rallied up, we lost to 50 MA, but again, on that weekly level, if we close back above that green bar, it's still just an inside bar pattern. So just be careful there. With the dollar on the downside, gold here, basically a pause candle. We had a huge surge. a $200 move in not even 2 weeks. So I know everybody's talking about manipulation and all that stuff. Guys, it's up from 1,800 to 2,000 in 8 days. Okay, it can have a day where it's fractionally lower. So gold here holding up. Again, we'll watch that 1962 level. By the end of the month, that's an important level for me. Silver inside hammer day, not bearish here. If this consolidates, this can go higher. Right now, it's telling me it wants to go through 23 to that 2350 level. That's the max I have for it right now. Maybe commodities overshoot. Maybe it can get up to that trend line again one more time here. But silver, nice power move there on the weekly. We'll respect that for now. Let's let the market and the charts tell us a little bit more. Platinum holding up as well. I don't like this pattern as much, but it's hanging in there. And then copper here getting a bounce. I think this can be shorted at $4 though. I'm not a fan of copper. I still think it needs to go down to 375, as you guys know. All right, let's get over to Bitcoin. Lastly, big power move here for Bitcoin up through 28,000 and just kind of pulling back here. This might have one more thrust to that 30K level. But just remember, you are very overbought and extended. These megaphone patterns, a lot of the time, you can get like a fake break to the upside and then they can come back in. But nice move there for Bitcoin. Is into a ton of resistance, a big wall there. But again, we'll respect it, and as long as this is holding up, the market will probably hold up here. But this is also acting as a bit of a fear trade right now. So if you get more stabilization out of the banks, this may come back in. So we'll watch that. All right, over to the European markets here. So let's see the Euro 50 first. Again, just a lot of chop here, wide range today. Obviously, UBS now owns Credit Suisse. What did we talk about? I said 4,000, I believe I said that last Monday. That's where it would want to test on a breakdown. And that's where we got a bid off of. So big tail candle, got all the way down to 39.75 and a nice reversal to close green. Again, these can hold up, but I think the highs are in on these. So be careful with these European equities. Maybe you can get up to 4,200, maybe a pierce of 4,200. But I'm not seeing a ton of upside in these either. There's the DAX as well. Again, there's that level that we broke out of. We broke back below. Where did we go? 14.5, right in that area. And we got a nice pivot off of that. Again, kind of the same chart there. So 50, 20 moving average, that should be resistance there. On a back test, and then the UK FTSE, this really tanked down to that 200 pretty quickly. I thought we would hold up right around 75. At least, I think I told you 76 actually. And they defended it for one day, and we had a pretty good sell to that 200 and all the way down to 72. Let's take that fib tool out. I think that was where we were looking. Trying to get this exact there. Yeah, so all the way down to that 618. So I told you 7,200. That's where we got today. I told you that last Monday, and that was a pretty good call. 1, 2, 3, 4, 5. Boom. Nice reversal there. So that should have, I would say, a local low end for right now. Upside, maybe you could get back up to 76, but don't expect, this is a big breakdown. Like this isn't a pullback pattern, right? Yeah, you chugged up there for, October to mid of February, and you wiped out almost all of that in like 2 weeks. So that's a wipeout right there. So be careful with these European equities. Again, if the spiders get a bid, they will get a bid. Just be aware of that. But for right now, not a good look here. Anyways, guys, back to spiders. We're holding up. Again, tomorrow maybe a little bit on the quieter side. We'll see what we get unless we get more bank news. But then obviously the all-important FOMC coming out on Wednesday. All right, guys, I'm going to wrap it up here. You guys take care. Come find me at CarnivoreTrades.com. Talk to you all tomorrow.